Alright, so today is Friday, February 2nd. It was NFP week, so this was pretty much just the trades that I went over. This is natural gas, and I have Nasdaq as well. Today I did not place a trade because it was NFP, and price action pretty much just went completely where I didn't think it was going to go. Even though it filled in these gaps, I didn't realize it until after. So I didn't place this trade, but I still just marked it up, and that didn't hit. Here I have Thursday with natural gas. I'm pretty much just going to show how I back test them and how I even set up a trade in the morning. I'll pull that out. So usually I always trade in between these sessions. This is when London starts, and this is when New York pretty much starts at 8 o'clock. I usually try to find my setup between here, and then I'm looking beforehand to see where that break of structure was. So I'm just going to bring it over here. So this pretty much would have been at 3 a.m. I usually get up around like 7 to even look at the charts, and 7:15. After that is when I'm placing trades. So here it is. I'm waiting for this break of structure with this yellow line. So that's when I would have made this yellow line right here, and this is the demand zone that pretty much caused that break of structure. So now I'm either waiting for price to come back up to this yellow line, or it's going to come into the demand zone, and that's when I'm going to go for either a sell or a buy depending on where this EMA is going. And right here we're still at 7:15, so this is pretty much when I would have got on, and price was coming to that. And I can show you guys really quickly how the trade would have placed out. So here I would have went in for a sell. I would have made my take profit right here, and instantly it's already going for it. And the reason why I placed my take profit right here is because down here is just pretty much where this demand zone broke structure up here. So I'm just trying to fill in that gap basically. So that was Thursday yesterday. On Wednesday, I do not trade, but I still marked up the setup. Here, this was 3 a.m. Price was coming down at 4:30, 6:45, 7 o'clock-ish. So pretty much, price came right here, broke this structure. That's why I drew this line. It came back down, went past this yellow line, and hit the demand zone. As soon as it passed this candle, making it seem like it was going up, that's when I would have got in. So that would have been Wednesday, and this honestly could have just went all the way up to right here, just because I know it's going to fill in that gap. I don't know why these candlesticks are so choppy. On Tuesday, I didn't trade, but this would have been the setup pretty much. That's the demand zone. It broke this structure right here. It passed this higher high from 4 a.m. So that would have been that. It tapped the demand zone. As soon as it would have passed this gray candle, I would have got in for a buy. And usually price is either under this white line, all up under it, or it's either over top of it. So it looks like it's about to consolidate, but when I would have got in, that pretty much would have been confirmation for me to go for a buy, because now I know price is going to be over this EMA. So that would have been that 1-to-1. Let's go over Nasdaq. I have to move in between these charts and the actual ones that I have to trade on because of my broker, but it is easier for me to see on just the regular NAS 100. So this was today as well. I knew price was going to tank as soon as I seen this W forming. When I looked at the chart, it was like around here, and I just instantly said it's about to tank, and literally at like 8 a.m. whatever, it just dropped like crazy. So usually end of P week, I completely avoid Fridays. Wednesdays I don't trade, so throughout the week I'm kind of just like watching it, but I'm not really placing as many trades. So that would have been today. It wasn't looking too good. You still could have got your money, but I'm not messing with it or risking it. This would have been on Thursday. Also, one of my trading rules is I don't trade after 10:30 a.m. So around here, this would have been the setup. It could have just sat and hit take profit, but I didn't even place this one either. But the trade pretty much would have went. Say this is at 2 in the morning, whatever. Price passed this high, and eventually it's about to pass this high. So it already passed these two. Past that one. So now I'm either going to wait for it to tap, come up off of these, which it just did off that one, or it's going to come back to this demand zone, which I'm expecting it to, because it needs to fill in this gap. Speed it up. So now I'm just waiting. This is going on 7 o'clock, and now it's coming back down. And see how it's over the EMA. So once it passes that, I know it's going towards where I need it to go. And I'm looking for a buy once it taps the zone. So there I would have made that buy. Let me go back. That would have been the buy. Take profit would have been here. And that would have been 482. And it's only there because it needs to meet this other higher high where that demand zone started. And this is going on 1 o'clock. So I'm not placing any trades past 10:30. So that trade would have been at 10 o'clock anyway. And then it would just would have had to sit and with a take profit and a stop loss. And that would have been that. That was on Thursday, yesterday. Mondays, I'm not too like crazy to just hurry up and jump in because the market is like getting ready for the week, so I'm not like that pressed to get into it. This would have been the trade. This was Wednesday's trade. I don't trade on Wednesdays, but this was just the setup that I seen. I usually just try to avoid it because it's usually just consolidating or it's just looking messy to me. But lately it has been hitting. So we can start this one from scratch. This would have been at 3 a.m. Price came past this lower low, so I made this line. This was the base that did it, and this was the base over top of it that I know that price is eventually going to have to come back to fill anyway. So now I'm waiting for it to either tap this yellow line or tap into these zones. And I don't remember what it just did, so. So here, it passed this yellow zone and tapped into it, and now it's tapping at the demand zone. So I would have went in for a sell. And you can tell by the EMA that it's coming down, so that's how you know the trend is a downtrend. So I would have went in for a sell. I would have put my take profit right around here just because I know it has to fill in this gap from where it just came from. And that would have been 228. Stop loss, it probably just would have been right here, but I'm already knowing that it's not passing that EMA. And there it was. So that was on Wednesday. Excuse me, girl. This one wasn't bad on Tuesday, but I didn't take it for this reason because of the way this EMA was looking. This was at 3. I mean, it kind of did what it was supposed to do, honestly. We can like back test this really quickly. So here, this is 3 a.m. This candlestick at 320, it passed this high, and it's coming in to meet this gap. So it passed this one right here, passed it again, tapped into it, going on 5 a.m. Met this gap, so that's filled between those two. Passing this now. This is what, 625-ish? So technically this kind of did pass right here. And it just went under the EMA. So that's kind of indicating that it's about to be a downtrend in a way. But it's just looking too like, I don't want to mess with that. So that's why I didn't place this trade on Tuesday. Like she's looking messy to me. But you could have got in around here, I guess. And she would have just tanked and went for that sell. But I just wasn't messing with it personally. Honestly, you could have got in like right there before this 8 o'clock candle. And that would have been your 1-to-1 from here to there. Came back and then tanked some more. But it's not really a good quality trade to me. It's not pretty much respecting my setup. So that's why I just left it alone. Now Monday she was pretty good. So we have her here. Now it didn't tap the demand zone until 9:35, which was perfect. But we can just back test this really quickly. So this yellow line was put right here because these candlesticks pass this little wick. So from here to here, it crossed it. So I know that either price is about to come tapped as yellow or it's about to come tapped as demand zone. And it's over top of the EMA, so it's good up here for now. But I know that it's about to go for a sell because it needs to fill in these gaps and it needs to come back down to fill in down here too. So we're about to speed her up. Tapped her. But I know that it still needs to come up into this demand zone, so around this 9:30-ish. But I have this starting here, the green starting here, because I knew that it was going to come up to the demand zone. I just needed to be patient. Alright, see, now she's going a little too fast. So right here at this candlestick that tapped into the demand zone, that's when the trade would have been placed, when it was placed. Let's see, it's messing up now. Whatever. It tapped into this demand zone, came down, filled it in, and that would have been the winning trade. And that was for Monday. So that's pretty much the back test that I have for this week with natural gas and Nasdaq. I'm trying to get more comfortable with just getting on lives every Friday, but I'm going to put like my TikTok in the description box, any other contacts. So if you guys want to keep up and follow me, I would really appreciate it. But yeah, that's pretty much it for these trades. Yep.